Hi everyone, welcome to this Big Talk, a podcast powered by The Big Well, the media with this mission to bridge the gap between the crypto space and the traditional world, and ultimately building trust in a too often still trustless world. I'm Letellier, reporter at The Big Well, and today I have the pleasure to host Paul-Adrien Hyppolite, CEO and co-founder of Spiko, an European startup that launched two tokenized money market funds this summer. So we're going to talk about this, Paul-Adrien. There will one in euro and another one in dollar, which have now surpassed 100 million in asset under management, or in TVL, I would say. So first, congratulations, Paul-Adrien. How are you?
Thank you. I'm great. Thanks for having me.
So I remind the audience that each week we are focusing on a particular topic, a trend, I will say, in the ecosystem. So this week will be dedicated to money market fund. So there is a plenty launch with BlackRock, with Ondo, with you, Paul-Adrien from Spiko. But first, I would like to start with this question. Why is it interesting to tokenize money market fund on the blockchain? What advantages does it offer compared to the traditional system?
Yeah. So first of all, I think tokenizing money market funds is interesting because it's tokenizing a form of money. So there are several forms of money. There is central bank money, and you have all this discussion around CBDC, which is tokenizing central bank money. You have commercial bank money, and there's also a discussion, by the way, about tokenizing bank deposits. So that's the money you have on your demand deposits or your term deposits at your bank. There is electronic money, which is very common, right? It's the money you have on Lydia, on Venmo, on PayPal. And stablecoins actually, in the European sense, I would say, are a tokenization of e-money. I think we'll come back to this throughout the discussion today.
Yes.
And there is a fourth form of money, I would say, which is money market funds. And that's money that is natively yield-bearing. And it's a bit special because it's both a form of money and also a savings or an investment product, and regulated as such. And for several reasons, including like the yield-bearing aspect, also the counterparty risk aspect, it's interesting to tokenize money market funds in the same sense as it's interesting to tokenize e-money or maybe central bank money one day and commercial bank money as well. And why do we tokenize? We tokenize to bring better access.
Mm-hmm.
I will maybe come back to this a bit later, but when you tokenize a money market fund, you disintermediate traditional securities accounts providers. So you facilitate access to this kind of products. That's also true for other types of funds, by the way, but we start with the very basics, which is money market funds. And it's interesting also because it's on a blockchain, right? And as many of you know, a blockchain is a very powerful infrastructure when it comes to settlements, when it comes to transferability, when it comes to the fact that it's always on, liveliness and all, which is a huge difference with the banking sector, right? Which has banking hours, banking holidays, et cetera, et cetera. So tokenizing money is interesting because we want to better access to money, specifically to money market funds in our case. And we also want more powerful money, which is transferable 24/7.
Okay, and you mentioned, different type of money. What are you? What kind of money is it? Because you mentioned the fiat tokenized. I would say it's a stablecoin. So classic one, there is centralized and decentralized. So what are you in terms of regulation in Europe?
Spiko, so if you look at the current stablecoin space, and I think it's going to evolve a lot over the coming years. And I would argue that tokenization of money market funds like we do is a new form of stablecoin.
Okay.
But if you look at the current space, you have sort of two types of stablecoins. You have unregulated money, that's USDT and other stables. And you have tokenized electronic money, tokenized e-money. With MiCA specifically, the MiCA regulation in Europe, it says that you can have regulated stablecoins like USDC issued by Circle, it's one of them. EuroCV issued by Société Générale Forge is also one of them. And once you are MiCA compliant, once you are regulated in the European Union, your stablecoins become a form of electronic money, a new form of electronic money that is on a blockchain, but in a sense not different from like $1 on PayPal or €1 on Lydia, right? And we are bringing a new type of stablecoins, sort of, which is, and BUIDL, in that sense, you mentioned BUIDL from BlackRock, is in the same category, which is tokenized money market funds. And we do that because it's yield-bearing, because it's also different from a risk perspective than e-money. And yeah, happy to dig into the details on this, but that's a new form of money, a new form of stablecoins, I would argue, that is coming into play. And we might have also, as I mentioned, like a tokenization of bank deposits and also tokenization of central bank money in the next few years. That would be additional forms of stablecoins, compared to the one we know. So we are just touching the very beginning of this space right now.
Okay, but first, since March, I would say in the launch of the BUIDL, the money market fund of BlackRock, the money market fund market represent nearly, so in March, 400 million in terms of dollars. And today, this figure has reached 1.8 billion, almost 2. So how do you explain that tokenized market fund are the first, I would say, traditional finance product we're seeing arriving on blockchain? There was T-bills, of course, but right now it's a pure traditional product directly on chain. So how do you explain that?
So money market fund is just a way to wrap treasury bills, typically. You can have other types of money market securities in a money market funds, like certificates of deposits, which are issued by banks, also commercial papers, which are issued by non-financial corporates. But the most common one is treasury bills, specifically in the US, where the treasury bills market is huge. So like most US domiciled money market fund actually have T-bills in their portfolio. And we are doing exactly the same thing with the Spiko money market funds. They are fully backed by T-bills. So in that sense, it's a fully reserved money, exactly like an e-money token, right, under MiCA, fully backed by either bank deposits or treasury bills, typically. Why is it gaining traction? First, because I think for two reasons. One is related to the crypto space itself. The crypto space was lacking access to traditional finance risk-free rate. You can argue that you have a risk-free rate on chain. That's the rate you can get into a lending protocol, for instance, when you deposit your USDC into Morpho or Aave. But that's very much driven by crypto market dynamics right now and the demand for leverage in BTC and ETH mostly. So that's the DeFi pure crypto risk-free rate. But the most common risk-free rate, which is the risk-free rate of traditional finance, essentially set by central banks, right, is being brought on chain through money market funds, which are wrapper of treasury bills. So a money market fund is essentially just a product wrapping a portfolio of T-bills. In our case, we have several T-bills, in each of our money market fund, and we issue shares of these money market funds, which is your ownership of the T-bills portfolio that is being wrapped by the money market fund and that is being tokenized through the issuance of tokens for the technical form of shares.
Okay, so for you, is it the beginning, the very first, we'll say early beginning of a general tokenization of all form of assets from the traditional side on public blockchain? I would say public blockchain because it's mostly on DeFi. Right now, we are seeing that, and yeah,
I think it's the continuation of the tokenization of money. I would argue. I very much think that other assets than money will be tokenized, like bonds, like equities, real estate, and all. But for me, it's just a continuation of the tokenization of money. And we have started with unregulated money, this offshore dollar like USDT. Now we are having regulated e-money that is tokenized through USDC, thanks to MiCA and all. I very much believe that this would be a huge driver of innovation in the payments industry. And we have this fourth form of money that I mentioned at the beginning, which is money market funds, that is also being tokenized right now. Why? Because it's the safest and best way to have access to the risk rate of traditional finance on chain. And I will coming back to my previous point when I mentioned like the rationale for tokenizing for crypto investors, right? You have also a rationale for tokenizing for non-crypto, like pure Web2 investors. And that's very much core to what we do at Spiko. We obviously serve the Web3, the crypto markets, but also like the normies, like the Web2 space. precisely because access to money market funds is an issue in Europe specifically. In the US, it's a very vanilla product. You have your Fidelity or your Schwab accounts, securities accounts, and you have like super easy access to money market funds. And it's very much like a retail and corporate product. You also have like equivalents of Conto, like Mercury or Brex in the US, giving very easy access to small and medium companies and startups to these products. But that's not the case in Europe. And that's why we are also getting quite a lot of traction recently, because this asset class in Europe exists. There is currently 1 trillion of money market sitting in European domiciled money market funds, but it's only accessed by huge companies and institutional players, mostly in the capital markets industry, like pension funds, etc.
And how do you explain that, especially in Europe?
I think because banks are extremely powerful, and the distribution networks of banks are extremely powerful, both for retail and corporate banking. And banks have no incentives to distribute money market funds because they are very low fees. They do not bring additional liquidity to banks. And in the US, you could say, okay, there are also banks in the US, right? So why is it different? Because you have a very much stronger capital markets culture. And much more powerful players in the capital markets industry in terms of asset managers, in terms of brokers that are connected to these asset managers, etc., etc. So that's essentially for me a reflection of the relative size of the banking versus capital markets industry in both the US and Europe. In Europe, unfortunately, it's very much recognized by policymakers, by the way, and they are trying to change that, but they are not really successful, to be honest. Capital markets are too small, and people do not have access to capital markets products. And essentially, money market funds are capital markets products, not banking products at their core. So that's for me the main reason. And we are trying to change that. And as I mentioned previously, tokenization helps a lot because it helps us disintermediating securities accounts providers to facilitate access to these products.
So that's a perfect transition, I will say, for my next question. Just can you explain how your products are working? Because there is some money market fund on blockchain. Everyone can have access to it, but this is not the same. I will say for you or for BlackRock. For you, it's only I can, if I'm whitelisting by Spiko, if I have KYC in Spiko, I can give a token, I can send a token to another entity with the same KYC and identified by Spiko. So is it, can you just describe how your products are working regarding that and the collateral and some stuff like that?
Yes. So first of all, you have maybe several players in the market, and I will try to put them into 3 buckets. All of them say that they are tokenizing T-bills. First of all, no one is tokenizing T-bills. Only the US Treasury.
Interesting. Explain this, yeah.
I mean, Treasury bills are. The issuer of Treasury bills, US Treasury bills, it's the US government, the US Treasury. In France, it's the Agence France Trésor. So only these entities which represent the government, the states, can actually decide whether to tokenize their issuance or not. And for now, they are not doing it. I very much hope that they will, and that we will help them doing that at some point. But they are not. There is no T-bill that is tokenized right now. All T-bills are issued in the traditional way, in the securities accounts with the central securities depositories like Euroclear in France, DTCC in the US, or the equivalent. What we are tokenizing are these wrappers of T-bills that I mentioned. And a wrapper can be different things. It can be a fund, or it can be just a fund is a regulated entity. So being a fund has a lot of implications. That's the space we are in. But it can also be a non-regulated entity, the entity we call SPV, Special Purpose Vehicle. So they are just like ad hoc entities created in a jurisdictions, let's say in France or Luxembourg, BVI, wherever. And they can do essentially the same thing, which is buy T-bills and sell exposure to these T-bills, but not through shares, like a fund, through claims, through debt securities on the SPV. And that's a different risk profile than a fund share, where you are actually the owner of the with the other investors, a co-owner of the underlying portfolio, and not a creditor of the balance sheet of a non-regulated entity. So you do have that's setting up a SPV is just like the quick and dirty way to do what we do. And it's usually the good thing to start the easy way. So we do have players in this T-bills tokenization industry that chose this path. So that's the first category. And then the second category, which is the fund, you have two types of funds. And that's where I will explain the difference between BlackRock, for instance, and us. BlackRock with Beetle is a private fund. So they are structured, issued in the BVI, in the British Virgin Islands.
True,
and
yeah.
because they are not registered with the regulator, it's a private fund, which can only admit accredited and qualified investors under US law. And there are very strict limits in terms of how you can define and who can be an accredited and a qualified investors. That's why they have this limit that you need to invest a minimum of $5 million.
Yeah, it's 5 million. Yeah, exactly. Currently,
to become a bidder holder. That's just related to this, constraint that they have, being a private fund, not being registered with the SEC. We chose to do it differently with a public fund. A public fund is registered, so you go to a regulator and you formally register, you file a prospectus, and you formally register your fund with the regulator. The sort of bad thing is that it's complicated. It takes time. For us, it took us like 6 months just getting the approval with the full prospectus submitted. The good thing is, once you have the approval, you have a public offering and you are allowed to target any type of investors. So it can be retail investors, non-professional investors, a much broader set of investors, essentially. And you are also free to set the minimum investment limit, the minimum ticket, wherever you want. And in our case, we put it at 1K.
Is it? Yeah, it's 1K for you. The
1K, euro or dollar. We could lower it, definitely. The reason is we put it at 1K is because we have onboarding costs, KYC costs. So for us, having like super small investors is not interesting for now. To be clear, that's like the sad reality. But we could definitely lower it. So we have a lot more freedom, and we have a prospectus, and also with the prospectus comes a lot of disclosure. So if you go look at our prospectus online, you can find it on our documentation on our website. You can find a lot of information in terms of how the fund works, and you have a lot of guarantee that it will operate as it has been approved to operate. So that's a good thing for investors, but it takes some time. So that's the difference between us and BlackRock. Maybe at some point BlackRock will go to the SEC and register the fund. But
soon, maybe. Why not?
Maybe soon, but yeah, we'll see. But maybe with the new administration, we'll see. But I must say that French law is very clear, and from a blockchain perspective, very, very, very intelligent, very smart, I think, because it clearly states since the ordinance blockchain, and I'm talking about French law because we are based in France and we use the French jurisdiction.
And it has been a good base for the writing of Mika or Micah. That's why it's good to.
Excellent. I think because we have good policymakers, and also because the law is clear and quite progressive, I would say, in terms of what you can do on chain. Since ordinance blockchain, it clearly states that for securities, you can have native issuance of financial instruments. In our case, it's a money market fund, but it can be another type of financial instruments on chain. And that the shares of the money market fund are actually tokens, and the tokens on the blockchain and the transfer on the blockchain are the true form of the share and the transfer of ownership of the shares. And that's very important to have like this form of legal clarity. And my view is that you don't get that in the US right now. That's why a lot of US players are setting up these private funds or going offshore in the BVI or Caymans, to set up their funds. We have the chance to be in an onshore jurisdiction in the European Union with a distribution passport, a very vanilla product that is on chain, and that's unique, to be honest, in the Web3 industry right now.
Okay, interesting. But you talk about the French law regarding crypto and digital assets. It was 7 years ago. Right now, how do you explain that you are the first to launch that kind of product?
Yes, that's also the sad reality of Europe. You have
because you say it's progressive. We have a good policymakers, we'll say, but you are the only one in 7 years. So.
My view is we are lacking innovative players. That's it. The law regulations aren't much the issue. It's much more about who's gonna do this. what we have done could have been done like a lot of several years ago, and as you rightly mentioned, it hasn't been done. I mean, it wasn't done, but that's only because no one did it. We don't have anything special from that point of view, right? And we are not using any passe droit or whatever. We're just using ordinance blockchain, live since at least 5 years.
Yes.
And yeah, that's it. But that's the reality. And I observed that indeed in the US, like asset managers like BlackRock, Fidelity, Franklin Templeton as well, I think should be mentioned, and a few others for sure, are more innovative and more willing to take risks, from that perspective, although they are in a jurisdiction where it's more difficult to take these risks.
You mentioned in one of your previous answer that you are bypassing some traditional actors, in your way when you are putting a money market fund on a public blockchain. Can you describe your setup, your custodian, some stuff like that, and what kind of actor are you bypassing? In fact, because you talk about banks, for example.
Yes. So I will make a difference between the asset side of the fund, the treasury bills that we have, and the liability side of the fund, which are the shares that we issue and that our clients own. On the asset side, the fund is super vanilla. We have what's called a depository bank, which is both custodying the assets, the treasury bills, and also controlling the way the fund works to make sure that it operates as it should, as per the prospectus approved by IMF, the French SEC. So there's nothing new on that front until T-bills get tokenized, and we can do maybe more interesting stuff on that front. But for now, it's super traditional, super vanilla, and it used the traditional issuance and trading rails of treasury bills. And our depository bank is CACEIS, which is a subsidiary. It's the asset servicing arm of two banking groups. One is Crédit Agricole, huge French bank, and one is Santander, which is the largest Spanish bank, to my knowledge. And they are a very big player. I think they are number 1 or number 2 in Europe in terms of depository bank market shares.
Yeah.
So it's great for us to work with them because from a custody, etc. standpoint, they have a strong reputation. On the liability side, that's where things are new. The shares, as I mentioned previously, are issued as tokens on blockchains, specifically on Ethereum and Polygon proof of stake for now, with plans to add other networks in the coming weeks, months.
On Arbitrum, no? Maybe. Okay.
Yeah. But we definitely want to be cross-chain for sure, and so launching on other networks makes ton of sense. That's where we are. Instead of being registered the traditional way, your shares. So the traditional way, I mean, in the securities accounts with securities accounts providers and all, your shares are on a blockchain. So from a technical standpoint, you have tokens instead of entry into a centralized database, and you have wallets, cryptographic wallets, instead of securities accounts at your broker or at your bank. And from a legal standpoint, I'd like to mention that because it's important. The funds are in the registered form. And if you think that's interesting, I can explain how bearer versus registered work. But the registered forms just means that in the register, you, let's say, Louis, you are onboarded with us. You are a client. You own EUTBL, or you are tokenized money market funds. You are in the register of the funds, in the shareholder register of the funds, identified as the owner. That's the registration. And it's a big difference with pure crypto assets or crypto native assets, which are typically in the bearer form. In the crypto world, your tokens belongs to the one who controls the access to it. And by the way, that's the way securities worked in the past. In the past, when the government issued a bond, for instance, or a company issued a bond, you had a paper certificate called the bond certificates. And anyone with the paper in its possession could go to the issuer, let's say the government, and collect the coupons, for instance, the interest on the bonds. With crypto assets, we have recreated bearer assets. Anyone who controls the private key of a wallet is de facto the owner, right? And for me, with the way e-money token works right now, so tokenized e-money, stablecoins, it can be a problem for some players, right? Because you have additional risks related to this technical property. In the registered form, because you are officially, from a legal standpoint, the owner of the tokenized securities, do not have the same types of risks. And that's also an argument for me in favor of tokenized money market funds versus tokenized electronic money, at least the way it works right now. Because especially for corporates or institutions, but that's also true for retail, to be honest. Holding stablecoins is quite risky. You can lose access to it, right? Sure, you can have a custodian and all, but then your custodian you transfer the risk to the custodian, and eventually someone has to pay for that risk, right? With tokenized money market funds, which are essentially in the registered form, you remove that risk. Have more legal protection that you can get hacked from an ownership standpoint.
Yes. In several occasions during this interview, you mentioned that soon we will be able to pay with a new form of money, which is, I would say, money market fund on the blockchain. So what are the next steps for you? Do you want to be a stablecoin issuer? What is your long-term ambition, with that?
Yes. So you mentioned Franklin Templeton and this vision that money market funds can be used as a payment instrument. To be clear, there are regulatory hurdles in the same way, by the way, as there are regulatory hurdles for tokenized e-money to be yield bearing. Because you have in the regulations right now a distinction between payment instruments and savings instruments. And money market funds are more into the savings category and e-money into the payments category. I'm not sure this is a necessarily smart regulation, but that's the way it works right now. And both like issuers of tokenized e-money and issuers of tokenized money market funds are trying to enter the payments, the savings and the payments world. I very much believe that all money should be yield bearing, right? That your bank deposit should be yield bearing. That there is no reason for you to own the risk-free rate. Even if it's negative, by the way, that would be a better monetary policy transmission. And so, yeah, money should be yield-bearing, and you should pay with yield-bearing money. You should transact with yield-bearing money. There's no reason for money to sit idle, other than, making banks and payment providers rich. So I want to push we want to push at Spiko with money market funds the boundaries on that front. And I think that issuers of tokenized e-money will try to do the same on the other way around.
Okay.
We'll see, what's the best approach. Hopefully, I think that several forms of money must coexist. That's rather, that is best for we want, people to have choice. And we want different forms of different risk profiles, different forms of money, different forms of transferability. But the vision is money is yield bearing, and we want our money market fund shares to be used to transact, to pay, etc., etc. And I'm very much optimistic that also the blockchain technology will help a lot on that front, because the way money market funds were issued in the past and the way that they still are, to be honest, because there aren't many as we discussed tokenized money market fund yet. But the fact of using a blockchain improves the transferability a lot. You have this free transferability between onboarded investors. So two onboarded parties can with on-chain settlement, on-chain finality, exchange a regulated cash equivalent. And that's huge, right? And super new for the asset management and the money market funds industry at large. So fully share the view of Franklin Templeton on that front. We'll see how we get there. That's not easy. For now, we are very much focused more on the buy and hold part of the market, but we do want to productize and facilitate transferability for these use cases that you mentioned, payments, transactions, and all to flourish.
Okay, and what do you mean by that? What's your end game in mind for Spiko?
We want to be the most used form of money.
Okay.
So the end game is like every retail investors, every company is onboarded with Spiko and using Spiko money. By Spiko, I mean Spiko is a neutral issuance platform. And I think that in the long term we'll have different money market funds. As I said at the beginning, for now we are only focused on T-bills backed money market funds, but we can have money market funds with other risk profiles as well, with certificates of deposits, commercial papers, etc. We can also have bond funds with higher duration, maybe credit risk. And all this will be on the platform. And the goal is to, for now, focused on money market fund, is to build a narrow bank, fully reserved bank. So being like the most mainstream form of money being used in France, Europe, and maybe internationally as well.
Okay. You recently surpassed, as I mentioned in the introduction, 100 million, for your TVL. So can we know who your users are? Is it mostly individuals or corporates currently?
Yeah. So you can find some information on chain, not all information off chain, because privacy is super important, and that's core of what we do. Because using blockchain reveals some information. Like every day, you can see the subscription and redemption flows on the money market funds. I think it's great. It just improves auditability of money market funds. Every day, you can see the number of holders. So you have a lot of information compared to the non-tokenized traditional money market funds. But the counterparty of this, I would say, is that it's super important to preserve anonymity of who our holders are, unless obviously they are willing to disclose their names. And some of them are. You can go on our landing page and see a few names that have accepted to be public. But what I can definitely share is that we have, I think, a healthy mix of retail and corporates right now. Roughly 50-50 in terms of number of holders.
Okay.
And obviously, in terms of assets under management, squeezed towards companies, right? Towards corporates, because they have usually much larger treasuries than individuals. And looking at the corporate segment, we are focused on small companies, to be clear. So
okay.
It can
and
be
when you are saying small companies, what kind of company is it? It's like startups, like
yes. Yes, so it can be personal holding companies, so the smallest form of company you can have. It can be startup, SMEs, like non-tech small companies. Also SAE in France, for instance, so real estate investment companies, that kind of stuff. So that's sort of our bread and butter, where we are really focused in terms of go-to-market. And we have several hundreds of these investors right now, together forming more than 100 million euros of cash, as you said. Then we also want to focus on institutions. So first of all, maybe as we grow, we will target increasingly larger companies.
Okay.
I think that makes sense. And also, we want to target institutions, and if I were to give an example in the crypto space, for instance, liquid funds, VCs, hedge funds, market makers, all these guys who have
crypto companies or crypto corporate company. Okay.
Yeah, it can be also non-crypto, like traditional institutional players. Most funds, have a push to cash, like a cash bucket that they typically allocate to money market funds. So that's also like natural clients for us. But in the Web3 industry, in the crypto space, we want to focus more on these funds, as I mentioned, because I do believe that there are really interesting use cases to explore there, specifically in terms of collateral management. So collateral is a big issue. It's not like a retail or startup topic, but it's a super important issue in capital markets. When you trade derivatives, for instance, on an exchange, the counterparty wants your position to be backed by assets that can be seized, and these assets need to be of high quality to preserve value in any market environment. So that's where treasury bills and money market funds play a huge role, and that's already true in the traditional financial system. I do believe, by the way, that there are a lot of things to improve the way it works in the traditional world with tokenized money market funds, because right now it's complex to transfer collateral from one place to another, and the fact that it's on-chain facilitates that. But in the crypto industry right now, it's even less optimal than in the traditional financial industry, because most collateral being posted by market makers is USDT right now. And
that's true, yeah. Especially when we are talking about derivatives in crypto, yeah.
Yes. So and that makes no sense, right? You have no yield, higher counterparty risks than with the money market funds. I think Beetle is very much focused on that as well, and we do want to play our part, bringing the only European-based retail money market funds that is tokenized.
Yeah, but you mentioned the collateral. 2 weeks ago, nearly, Bloomberg revealed that BlackRock was in talk with some exchanges to include its Beetle as a collateral in crypto derivatives products. Do you intend to do the same?
Yes.
Because you mentioned, and of course, it's just between you and me. What kind of actor are you targeting in talk currently?
Exchanges, prime brokers. It's a bit of a chicken and egg problem, right? You need to target both the users of the tokenized, the one posting the collateral, so the crypto traders, and the recipients of the collateral, so the exchanges, the prime brokers, the custodians. So yeah, targeting all these actors in this space right now.
Okay, and what kind of use we can expect in the following months? There is collateral, there is saving, and are you targeting something else?
I think what you mentioned in terms of payments, transactions is interesting as well. Would like to test a few things in this area.
Okay.
It's probably more for the long term.
And sorry, Paul-Adrien, because I have some difficulties to understand when you are talking about payments. How it could be work, like I'm putting your product as collateral, and I am able to borrow some money, and I am able to pay with. So how it could be work?
You could imagine an integrate. Let's take the example of a retail payment. So you want to buy coffee with money market fund shares.
Yes.
You can imagine an integration with card networks, because the moment you pay, the same way as you have crypto cards, right? The moment you pay at the point of payment, you have a transaction between cryptos that you have in your crypto card and fiat.
I see. Okay.
And you can have, so you can have an automatic redemption of money market fund shares when you pay at the point of sale. So that's the way it would work. And because you have some time to settle vis-a-vis the card network, it can work really well with money market funds in terms of lead time and settlement time.
Okay, so you have cash deposits, with some yield, some rewards, and you are able to pay with it in the same time. So that's okay.
Yeah. Let's say you have a Spiko account and a card associated with it, and that will work.
Okay, interesting. I have another question regarding your product. What did you choose to launch a Euro product? Of course, we are in Europe, so it's obvious, but you choose to send a product in dollars. So why?
The story is, initially we wanted to launch the dollar product.
Only the dollar product. Okay.
Only the dollar product.
First, yeah. Okay.
Yeah, and that sounds a bit weird because for several reasons. We are in Europe, and also right now our Euro fund, is larger than the USD one. I think this could change, by the way. We could, I could tell you why, but initially we wanted to launch in USD only because we were very much focused in terms of go-to-market and the Web3 startups, Web3 foundations, and all. And as you know, this economy is denominated massively in USD. So when you want to offer an alternative to USDC or USDT, it's best to start with the USD money market funds. The reason we also included to eventually add the Euro is that we expanded, our view, and which is what we are doing now. Focusing not only on Web3 in terms of go-to-market at all, and trying to bring any type of e-money, whether tokenized or not, or bank deposits, whether tokenized or not. I mean, there are no tokenized deposits yet, but yeah, you see what I mean, on money market funds. So that's the reason we also included the Euro, and we are very happy with this choice because we are starting to see product market fit there, and the Euro fund is quite successful, actually even more than the USD one. I still expect the USD to grow as we are increasing our international focus and presence, and also as we are accepting euros into the USD money market funds. We have a lot of demand for our clients to invest to deposit euros into the USD money market fund and redeem euros into the money market fund, because you have the same issue as in emerging countries. Not many people have USD denominated bank accounts.
Yes.
It's easier to get one in Europe than probably in some emerging countries, at least. But that's still a pain. And people want to have access to the dollar because they want to diversify their money exposure. They want to have access also to the risk-free rates in USD, significantly higher than in euro. So you have several reasons why there is demand for USD. And as we start accepting euros soon into this fund, we do expect it to grow quite a bit.
And this is there is a big leg, I would say, for the development of the stablecoin ecosystem, is that now it's only in dollars, but that's a huge problem, especially in Europe. For example, if you are an European actor, you want to have a euro stablecoin to not all the time have the obligation to do an off-ramp, and to exchange with the Forex, for example, your dollar in euro and euro in dollar. So is it your idea in mind to have a dollar and euro and to be able to exchange both, in the same time, to give this Forex access for traditional players?
Yes.
Okay.
Yeah, absolutely.
Interesting. Okay. Currently, what's your business model, at Spiko?
So we are charging asset management fees.
Okay.
By we, I mean the CCAV, the issuing the open-ended investment company issuing the money market funds, and we are keeping a take rate of these management fees. So that's our business model. It's a volume business, I would say. You have a lot of deposits to make money, but for now we have no plans to charge a subscription to access the Spiko accounts. So creating a Spiko account, to be clear, and maintaining a Spiko account is free. You do not have any custody fee. That's a core element of our proposal, and difference with securities accounts. So yeah, it's just a take rate on the performance of T-bills in the portfolio. That is currently 10 bips, so 0.1% for the Euro fund, and 40 bips, 0.4% per year on the USD fund. And to be specific, it's a fee that is taken every day on the fund.
On the reward, yeah. Okay.
So every day you have new interest that is generated at the end of the day, and a cut is taken so that the interest rates are always net of fees. So the performance that we highlight on our website and that you see also in the Spiko app is always net of these fees that we take.
Okay. Are you not afraid by I would say the cutting rates are normally coming in the following months, because that's the core of your product, to offer a yield based on the central banks around the world. So
I think it's question mark. We'll see how far this goes. But I'm being mindful of this. I'm careful with this, because we do remember a time when interest rates were even negative in Europe.
Yeah,
and
it was an interesting time.
Interesting time indeed, where T-bills issued by France or Germany were yielding negative rates. I don't think that we come back to this so soon.
Okay. That's a huge bet, I would say. That's a huge bet.
I mean, that's not market expectations. If you look at the market expectations, we converge toward around 2%. 2% nominal rate, by the way, it means that if you have, let's say you are at 2% ECB rate, so T-bills are yielding roughly 2%. Assuming we are in a normal world where we have 2% inflation, so the central bank is on target, so that means that you have real rate at 0%.
Yes.
That's already low, right? In the US, the real rates are, the equilibrium real rates are usually not expected to be at 0, right? So I do think that we converge to our 2.5 maybe. We'll see. If there's a huge recession, we can have like short-term adjustments, but that's probably a good estimate. At least that's what the market is expecting right now. And then we probably increase a bit. We have there are a lot of macroeconomic
indicators.
dynamics, that are not very conducive of super low rates. So we will see, but we'll be, in any case, rates being negative doesn't necessarily mean that you don't use money market funds anymore.
No, of course, yeah.
They didn't disappear
Good point.
because also banks were charging the negative rates on the demand deposits, on the current accounts, for corporates specifically. But we'll see. There are a lot of things also that we can do in this space, right? In terms of taking more credit risk, duration risk. So in a world where we have like an increasing forward curve, rate curve, makes sense to take exposure to 3, 6, 12 months yield. And we'll also, I think, facilitate that on the Spiko app when the time comes.
Okay. My last question, Paul-Adrien, will be on the adoption, because in my opinion, you are one of the most interesting actor, because you are in between, the crypto space and the traditional world. So, you are talking a lot, I imagine, to big corporates, for example, or corporates. So, where are we in terms of adoption, in terms of knowledge regarding especially DeFi or principles of public blockchains?
It's a tough question. I think
this is the last one.
We're still very, very early. If you look at, you mentioned the assets under management for tokenized money market funds or tokenized T-bills at the beginning.
2 billion, it's very small if you, of course, compare to the
It's minuscule. I think
it's nothing.
Take only the US T-bills. I think there are around $6 trillion of T-bills issued.
Yes.
So it's super small, and you can take the outstanding amount, the assets under management in US domiciled money market funds only. It's around $6 to $7 trillion. In European domiciled money market funds, it's around $1 trillion. So you see the orders of magnitude. It's super small, and we are only at touching $100 million. Same for stablecoins and payments. I'd be interested in knowing the size of the non-tokenized e-money, taking the deposits on PayPal, Venmo, Lydia, and all. I guess, I'm not sure, but I guess it's way higher than what we have even for stablecoins right now, which is around 150 or between 150 and 200 billion dollars. So very, very early. The crypto space is still, that's something that we have, that I can say that we have sort of experience over the past few months. The crypto space is still very much, self-centered. Protocols that are getting traction in DeFi are very, very crypto native. When you look at the use cases, it's like borrowing ETH, staking ETH, borrowing BT, wrap versions of BTC. That's the core of the crypto space right now.
So money and very speculative collaterals,
super speculative. So that to me says that we are very, very early. There is no mainstream adoption of stablecoins yet. There is no mainstream adoption of tokenized money market funds yet. But I must say that, we have started doing that very recently. Even stablecoins, like PayPal issued a stablecoin. So the tokenized version of the dollar PayPal last year only. And if you look at the use cases, it's very Web3. It's used in Camino, lending borrowing protocols. It's not by the masses. But I do hope that through fintechs and UI, like the one we are doing, we very much increase the mainstreamness, I would say, of this industry. And I'm being very positive on that, because I'm very positive on that, very bullish on that, because the technology is there, and because the products can start being built, on this technology, and the technology is even improving. So,
but for you, is it realistic to say right now, public blockchain gonna win, at the end? Because most of the time, we saw in many reports that private blockchain will be a better option. So, do you agree with that? And what we can expect, in terms of that? Is it DeFi as we know today, the future of the traditional financial system?
Another
tough question.
I will have a mixed answer. I think I very much like the public blockchain vision, and I dislike the private one, private blockchain. I don't know exactly what it is, but it's just, you know, another types of centralized database technology, and a lot of pain points and problems that we see in the capital markets industry, especially in the post-trade segment of the capital markets industry, are precisely related to the fact that we have all these myriad of factors using centralized database that do not, you know, communicate well between each other, and having like one platform, maybe messaging layers between public blockchains, to me is a more interesting and yeah, beautiful vision, I think. So I hope this infrastructure is going to win. But I don't know. It's still there are a lot of, you know, adoption issues, and especially by the big traditional financial players who control this industry. And in terms of DeFi, I think DeFi needs to evolve a bit, because and I will conclude by coming back to what I mentioned between in terms of the difference between bearer and registered assets. I think you'll have a lot of players won't be comfortable, especially like corporates, like traditional institutions, won't be comfortable interacting with bearer assets. And regulators won't be either, to be clear, because with bearer assets at the time came a lot of issues in terms of theft, in terms of, you know, fiscal, etc., tax obligations, and all. So I think that, you know, DeFi needs to adopt, to evolve a bit and adopt registered assets like tokenized money market funds is a good start. And looking at DeFi right now, that there are not a lot of use cases around tokenized money market funds. I very much hope that we will unlock a few of them over the coming months and years, but it's still the very beginning. And to me, this means that it's still very much crypto-centric.
Right
and
now,
the vision that
yeah,
that we bring traditional financial players on DeFi is very forward-looking.
Come try DeFi. Come try safely, but come try DeFi.
But yeah, indeed, come try, and it's what the experience is sometimes amazing and increasingly better. And I'm pretty sure that, you know, building blocks that are being developed in DeFi will be used in traditional finance in terms of automating transactions and all. That's for sure.
That's your vision. That's your vision, at least. Okay. Thank you, Paul-Adrien, to have been with us for this big talk. Thank you for everyone to have listened this podcast. And I remind the audience that each week the Big Whale is focusing on a particular trend of the ecosystem. So this week is going to be dedicated, of course, of the trend of money market fund. That's a very interesting, I will say, beginning for a big tokenization of all of kind of asset and traditional asset. So yeah, we will follow this trend, of course. Thank you, Paul-Adrien. I wish you good luck for your roadmap, and good luck for your roadmap. And thank you once again to have been with us in this big talk.
Thanks for having me.
Have a good day.
Bye.
Bye-bye.